Hello, everyone, and welcome to the Buck Stops Here. I'm Catherine Murray. Well, we've talked a lot about energy and energy investing, really from a stock perspective. But I want to dig into the details a little bit more in terms of where we are now and what we might see in terms of the pain at the pump and really understand why this is occurring. And again, as I say, where we go from here. Joining me for that discussion today, very pleased to bring in Dan McTeague. He's the president of Canadians for Affordable Energy. Wow, is that ever more important now than ever before? Dan, welcome. Thanks so much for being with us.
Oh, my pleasure. Good to be here, Catherine.
So, Dan, just going back, you were spot on in terms of predicting where we would be today in terms of the price of fuel and gas. And now it seems people are finally paying attention to really what's been 10 years in the making. Can you just describe a little bit about why you saw this coming and what you see right now?
Well, in my work years ago as a parliamentarian, I spent a lot of time on pricing for energy, especially gasoline and predictions. But it wasn't lost on folks like myself seeing consistently one after another pipeline projects in Canada, unlike the United States and other places around the world, frustrated, dragged on, canceled. And of course, in the case of one pipeline, the federal government having to actually get involved with taking an equity position in ownership. One had to conclude that a nation with the third largest provable reserves of oil in the world having this much difficulty getting its product to market, something that had really helped Canada in tough times in the 90s and 2000s, get it out of the debt situation it found itself in. This really was a signal of impending trouble. And of course, keeping an eye, as I did, on the value of the Canadian dollar no longer serving to protect consumers, it was pretty simple to cobble together a scenario a year and a half ago, which I did with my old friend David Booth at driving.ca, where we would wind up at $2 a liter this summer. Of course, that's only part of the story. The rest of it continues to emerge that although prices have dropped, it's done so against the backdrop of the likelihood that we're heading into a green energy driven recession.
Right. So we are seeing prices pull back a little bit right now, again, because of the fear of a recession. But, that doesn't dismiss the fact that there has been a massive inventory shortage and likely will continue to be. And I want to bring up the big news of the day, which is pretty shocking for anybody. We pre tape this on a Friday and it airs on Sunday. So I'm sure people are going to really start to look at the story. But Uniper out of Germany, their large energy company, needed a 15.2 billion-dollar bailout from the German government. Let's just talk a little bit about how that happened.
Well, of course, the fixed costs of electricity and gas have bedeviled and created havoc for a lot of much smaller energy players throughout Europe. No one a year and a half ago could have imagined that we'd be in the situation we're in today, where the cost of energy has, for most consumers, tripled. And so, for companies that have hedged and have put themselves in a position of guaranteeing prices for a period of time, now finding themselves at a significant loss. This all goes back to, of course, Germany's greater reliance on renewables, while at the same time saying, any extra additional supplies of energy that we need, natural gas, can come from Russia. It's really putting all your eggs in one basket. And of course, this happened under the watch of Angela Merkel and her policy on energy wind. But it really speaks to the fact that there is absolute chaos now in the price of energy, such that we are seeing natural gas futures 4 times higher than they were this time last year. For Canadians, of course, that may seem like a faraway place, and Americans, but we're not immune from this. We're going to see significant increases, probably a tripling of our natural gas costs, not the distribution cost, but the actual cost of the product itself. So for Germany, a real wake up call, and perhaps only the beginning of what could be a very disruptive year. Germany, of course, is manufacturing depends on natural gas, and we're now seeing that there's a significant pullback. It's no longer the leader. It's now very frail, on its knees, to the extent that we now hear the foreign affairs ministers actually saying we demanded Canada give back, the turbines for Nord Stream 1, because it would mean that we would not be able to produce natural gas or get natural gas to keep our economy going, and we couldn't supply any more goods, armaments or otherwise, to Ukraine. Very dangerous.
Take a quick break. We'll be right back. Dan, I wanted to pick it up in terms of the situation we're seeing in Germany. And, as you mentioned, it might seem so far away, but there is chaos in the energy markets. Um, but can you just go back for one moment and talk a little bit about the relation to the wind turbines? I don't know that people are aware of that. And what's the significance?
Well, yeah, the gas turbines were significant. Canada, through Siemens, had been ordered to receive the order to repair the turbines that compress and get natural gas from Russia through the main pipeline, Nord Stream 1, into Germany. Those were undergoing repairs in Canada with the sanctions that Canada agreed to. It meant that we were no longer going to supply Russia. But of course, this also meant that at the very time in which there's repairs and maintenance happening on Nord Stream 1, this is a slow time of the season, but we need to build up those natural gas inventories in places like Germany. This is the time in which you do it. They desperately needed that part, so much so that they were now getting a bit, maybe it was a slip of the tongue, but which has now been walked back. But I think the foreign affairs minister of Germany made it very clear that without those turbines from Canada, they would not be in a position to help Ukraine. And so you have a sort of a real standoff in which Germany is vulnerable to Russia, needs to give Russia the turbines so they can get natural gas, so they can keep their economy going. That level of vulnerability is unseen in our time. And it really is a product of a country like Germany and Europe and the world having put far too much of its efforts towards renewables. And of course, when they didn't work, we now see that Vladimir Putin has been able to play, the game of ransom and has them literally over a barrel.
Hmm. And to your point as well, as it relates to Germany and the importance of manufacturing for their economy, but also Europe as a whole, and we think about the economy globally, I mean, that puts the potential for significant downward pressure for the global growth outlook. Perhaps less so for North America, but of course we still are so globally interconnected. Just for a moment here, in terms of taking a look at Russia, um, and the factor that it plays on the global economy and where we see their oil and gas going. What's the latest from your perspective? And I say that in the sense that, let me back up for a second. I say that in the sense that there's the view that we might see, two separate economies, right? The Russia China, in other words, Russia supplying China, and economies do well when you have cheap energy. And then there's the rest of us. Well, Europe for sure has expensive energy. And then let's talk about Canada and America. But right now, how do you see the relationships playing out? What's going on?
A complete realignment of the geopolitical power structure. Russia is not being hurt by the sanctions whatsoever. In fact, it's doing quite well. And it doesn't matter that we've gone to the banking sanctions. That hasn't worked either. Russia's doing very well, notwithstanding the fact that it has been somewhat hemmed in, but it's doing a lot more damage to Europe. And in terms of not just Germany, but the stability of Europe, we see this morning that Germany is asking European nations to join with it in a 15% reduction in rationing, if you will, of natural gas. Portugal, Spain, Italy basically said, no, forget it. We're not part of Greece. We're not part of this. So you could see very much, not so much the pressure on Russia as much as the fragmentation of the European Union. And I think that's a very serious outcome. And it really points, Catherine, to what happens when you mess around with energy security. This story is really about the world saying no to hydrocarbons, wishing it away as if it doesn't matter. And now we find ourselves in a position of extraordinary vulnerability, not just for Europe, but the consequences are going to be felt here in Canada as well. And no irony lost in the fact that Canada, with large reserves of natural gas and oil, missed this opportunity and did so deliberately.
Absolutely. Let's talk about that in terms of the impact on Canada. How do you see this
Well,
playing
right now,
out?
of course, because we're not selling enough of these products. The Canadian dollar is taking a hit. It takes 129 pennies to buy a U.S. dollar. That's leading to inflation. Look, even the governor of the Bank of Canada, Tiff Macklin, last Thursday, Friday, had to admit after his 1% shocking increase that the Canadian dollar is not responding to the therapy of higher oil prices. That's leading to inflation, which is in turn leading him, in part, to raising interest rates. Canadians, I think, are starting to waken up to this reality that we can't forsake our gift of abundance of clean energy and the energy that the world desperately needs, especially our natural gas. 17 projects, LNG, all gone. And how did that happen? Interference by the government and unfortunately bending over backwards to climate catastrophists.
Absolutely. Okay, we're going to take a quick break. We'll be right back. More to discuss. Dan, I like the wording that you used, climate catastrophists. Everybody's voting in for, what I suppose feels good and the right thing to do. But, the wording in terms of transitioning to renewables, is a bit of a misnomer. It's taken a lot longer than anybody thought and at a much higher cost. What do you make? Because I know you write a lot about this, the word transition, and what Canadians need to really understand about this. They're now paying attention because they're seeing these high gas prices.
Well, they're seeing that the transition is not without consequence, that it is painful and that it's likely unnecessary because it's not going to drop the very one thing that everyone is looking to try to address, and that's emissions, CO2 emissions. What it is instead doing is creating an environment, as you're seeing, for instance, in Germany, where in the pursuit, without looking before you leap, you now wind up having to, rely more on coal production, oil production. You're actually defeating the very thing that you did because there has been a very significant amount of short-sightedness that has gone into this. You're also destroying demand. And by that, I don't mean, people basically choosing to go from an internal combustion engine to an EV. Not that those things can't be built without a significant amount of hydrocarbons. You're actually creating a scenario of impoverishing and making the world less resilient to the shocks that we've seen post-COVID. And so I think Canada has an opportunity. It's insulated because it has had this advantage for many years. But if it continues to go down this road willfully blind to what is happening in Europe and around the world, we may very well find ourselves in a situation of economic dislocation on a scale we haven't seen since the 1980s.
Hmm. And Dan, when you are looking at the impact that the higher gas prices is having on Canadians right now, what are you seeing?
I'm seeing a lot of people in shock. These prices have not just stopped at fuel. They've gone into food. They've gone into pretty much everything that we pay for. And so there's a sense that our wages are not reflecting these massive increases in the cost of living. And while some talk about, and it's true, I mean, there's a supply disruption. COVID has created some of this. The one elephant in the room that continues to be overlooked by economists, by others, is the fact that energy prices, which are at the core of our economy, have been allowed to get away from us. And we have a government, of course, in Ottawa that doesn't just realize that these prices are damaging the bottom line for every consumer. They're actually adding to the burden with these carbon taxes, not just the first one, which increases more substantially as of April 1st, but the second one, the clean fuel standard, which will accomplish absolutely nothing other than to risk the cost benefit analysis in which the benefits will be far less than the cost and the burden to consumers. I think you're going to lose people along the way, and rightly so. I think Canadians are at an inflection point where they're starting to say maybe it isn't such a bad idea to actually build pipelines in this country to rescue the world at a time of energy insecurity.
Right. I mean, people need to know that there's another carbon tax, that there's another gas tax coming, correct?
Yes, yes, there is. So there are the two that with the one that we're familiar with, and it increases by $15 a ton, which means 3 cents a liter, 4 cents for diesel starting April 1st up to 2030. The second carbon tax, not well understood. That's to get companies to reduce their emissions. Refineries will do that for the first year, but come 2024, you're looking at a 4 cent increase every year to 2030. We're going to look at a 20 to 25 cent increase in the price of diesel and gasoline by 2030. You're going to be looking at another 30, 35 by 2030 on the first carbon tax. And let's not forget, this won't reduce our carbon emissions. More importantly, you're now looking at regulating the oil and gas sector to the extent that you want them to cut back emissions by 48%. It's mathematically and scientifically impossible. Companies are already doing this. We're getting no credit for it right now. Unfortunately for Canada, it's a recipe. It's really a recipe for disaster for the country. It's a suicide note being pushed by the Liberals and the NDP, of which I was a member for many years.
Yeah.
Unfortunately, I think for a lot of Canadians, damage is about to hit us.
Why are they still going down this path when it's so damaging to Canadians?
I think they're indifferent to what is happening and hoping that the narrative by opinion leaders will continue to be that we need to go this route. But I think anybody who's reading the papers or looking at news and watching online knows the disaster that awaits Canada if we go down the road of the mistakes that Europe has made over 30 years. Trillions of dollars invested, much of it public money. I'd love to be able to look at some of these renewable companies and see just how much money they've actually been able to make or to produce for their shareholders without the benefit of having a direct connection to the taxpayers' funds. Because at the end of the day, I don't think the private sector is making a big move unless encouraged, goaded, or whipped into having to make
Yeah,
those investments. The reality is going to start to hit this country very quickly.
absolutely. Okay, quick break. We'll be right back. So, Dan, as we've discussed, I think that it is a very difficult environment for many Canadians, and I don't know that it's going to end anytime soon in terms of inflation, the cost of gas, food inflation, and then also, of course, we have the BOC raising rates by 1% and what that might do to the Canadian economy. What are your thoughts in terms of where we go from here?
Catherine, I think they're all interconnected. The cost of fuel, cost of diesel, gasoline, jet fuel, the stuff that runs your locomotives, your airplanes, your cars are now, and of course, mining and agriculture are now starting to, make their way into other aspects of the economy. So, for those of us who don't really pay a lot of attention to energy prices, may have a position green, non-green, we're all green. We can't, we can't dismiss and we can't ignore the knock-on effects in terms of, say, food prices, which have gone up year over year dramatically, far more than I think most had anticipated, and likely to go even higher if you have the federal government again that is completely oblivious to the danger that the world finds itself having turned its back on Canada's abundance, its resources. If we have a circumstance where we start saying, all right, we've got to stop producing nitrogen, something that is extraordinarily important in terms of fertilizer. So I think we have to perhaps have Canadians engage in an adult discussion that our policies can't be based on selfies. They can't be based on, wonderful, notions of what the country might be, but actually to deal with reality. And socks and sobbing has nothing to do with where I think public policy needs to be, and that's a strong dose of reality, a reality that
And,
we can't discard our energy abundance.
and the reality in terms of gas prices, I mean, where do you see them going in a year from now?
Well, I think they're going to remain high. Governments will ensure that that happens, but I also think a weakness in the Canadian dollar that is contributing in no small part to inflation in this country, as well as, of course, the fundamentals remain the same. As long as Europe is going to be in a problem for 2023 and 2024, as far as natural gas is concerned, this will put pressure on diesel prices, which in turn will continue to put pressure on those who have product. The other issue, of course, is more fundamental. Oil companies and others are simply saying we're not making investments. We're told not to make investments by governments, whether it's the Biden administration or here in Canada, the Trudeau government. So they're simply cashing out and giving it to their shareholders. That's not very helpful in terms of the long-term need. The world needs more hydrocarbons, not less. And I think we have to have a very serious discussion about reality here in this country and around the world.
Right. There's no incentive really for them to increase production at this point, and they've been vilified as well. So
Yeah, well,
I think we should all expect to have continued short supply. Let's also add into the equation, of course, real brief here, we've got 2 minutes left, but the Bank of Canada raising rates by a percentage point to try to combat inflation, but you don't see that reflected in the Canadian dollar, which is interesting. Um,
Hmm.
what kind of concern do you have as it relates to the impact of higher rates on Canadians? But also importantly, you brought this up during commercial break, Canada's sovereign debt. We don't talk about that much.
No, we don't. So a 1% increase has just blown a $13 billion hole in our ability to service our debt to pay for social programs. I suspect that we're going to be seeing another 2, 3, maybe even 4% increase by the time the bank realizes that it wants to get to its 2% target, or is able to achieve that, which I think is frankly not possible. Uh, what are we looking at? Another $40 billion in servicing costs just to meet that debt? Sooner or later, someone's going to pick up on that. Bondholders will probably say this is not viable, especially if there's a slowdown in the economy, caused in no small part by inflation, people who can't work, don't want to work, supply chain issues. At the end of all of this, I think that the country is in a real serious situation, and any one thing could cause it to get a lot worse. But very notable that the bank governor did admit that he's shocked that even with his interest rate increase, we no longer have the advantage of the petrodollar having blocked pipelines, that he is going to have to increase those rates in order to meet his target. Too bad the 2%, 3% increase in carbon taxes, which will increase inflation in this country, aren't considered by the governor of the Bank of Canada. For people in the street, that's a no-brainer.
Absolutely. Dan, it's been a pleasure speaking with you and to really, have a conversation where I think people can understand why we're in this situation. Nobody cares until you're affected at the pump. So, Dan, thanks so much for joining us.
Great to be here. Thanks for having me, Catherine.